In today's video, we're talking cryptocurrency trading. There's a lot of ways to trade and a lot to know before you get started. I'm going to share with you how I trade personally and why I've adopted this style, and I'm going to give you some things to consider when figuring out what works best for you. Welcome to Straight Up Crypto. My name's Jim. Be sure to read the disclaimer in the video description down below. I'm not a financial advisor and I'm not your dad. It's your money, so take accountability for it. I'm just sharing with you what I do personally. So when people think about crypto trading, their mind tends to go straight to day trading. It seems glamorous, right? You've got four monitors everywhere, neon lights, and big profits every single day. And it's all followed up with a surf and turf dinner and a $500 bottle of Cabernet wine, right? But listen, this is a full-time job and it is stressful for people that do it. I mean, constantly monitoring of the charts. You're working on really small time frames and things move really fast. Keeping an eye on the news moment to moment as well. Typically, I would say that news, if you're a longer term investor, creates volatility only and it doesn't actually affect the market. But when you're day trading, that volatility is what you're trading off of. And so the news can impact positively or negatively exactly how you trade. And so listen, day trading is a whole lifestyle and it doesn't work for most people, including me. I don't do it. But what I actually do there's three different things. And I'll explain what they are, but your takeaway from this should be the reasons that I do what it is that I do when it comes to trading. You shouldn't copy me. I think that happens a lot in crypto where people see what somebody else does successfully and they go, well, I'll just do that. But there's a couple problems. One is it may not fit your lifestyle or your budget or the way that you operate. And also, you haven't built the skills and the necessary background in order to do it with any level of success. And so, if you just copy somebody, and this, yes, of course, there's copy trading and everything like that, but you didn't learn anything, right? So, the first thing I do is I'm a long term investor. And listen, crypto is high risk, and long term investing is the closest thing to guaranteed gains that you're going to get in crypto. And so, one of the major factors to be trading this way, it is the more kind of sure thing. I wanted to reduce risk, but still have the massive gains potential that comes with cryptocurrency. And so, the amount of time that I have to invest in long-term trading is relatively small compared to so many of the other ways of making money. Listen, I work, I make trainings, I do these YouTube videos, I go to the gym multiple times a week. I have all the normal life responsibilities and things that everybody else does. And I still, at the end of the day, want to actually have a life for myself too. So, in order to be a long term investor, I just built a diversified portfolio, picked the levels that I wanted to get into different projects at, the different prices, picked levels or prices that I would want to take profits at, and then periodically just kind of reevaluate and see if things are going well, if I want to make some adjustments. I've been around for a while, so I was able to get in at basically, the bottom for Bitcoin and coming out of the bear market with altcoins so I could kind of get a feel for what was going on in the market and everything. So I've been able to make those profits. If you're getting in later, it's a little bit different. So you have to, kind of strategize around that. Now, note, I said I'm a long-term investor and I didn't use the word hodl. I didn't say that I'm a hodler. And to me, maybe it's just a mindset thing, but to me, listen, if you consider yourself a proud hodler, and there's a lot of people out there, I have a video that you really ought to watch. I'll link it at the end of this video for you so you can go ahead and look at hodling just as a strategy and a mindset versus what I consider long-term investing. So, in addition to investing, I also do swing trading. And it's exactly what it sounds like, trading market swings. And now this is done on a longer time frame. So basically, I'm trading longer term swings, longer term charts, at a minimum, basically 4 hour charts, daily, even up to weekly, depending on where we're at. And so I do this with certain spot positions, right? So I'll just buy and hold some of the crypto and then sell it at another level at a swing based on when I got in to that particular coin. Like if I wasn't holding it and I bought it then, I might decide to just sell entirely there. If it's something like Bitcoin, I will do it as maybe futures trading. And so what I'm looking for there is really it's a setup on 4 hour and daily charts. I open a long position and set a stop loss, kind of really mostly on the 4 hour chart, but maybe on daily, depending on what kind of a setup it is. So just like being a long-term investor, swing trading doesn't require a lot of babysitting, right? Because there's a setup. I'm expecting, Bitcoin to play out a pretty good run for a while. I've got my stop loss set. Maybe I set a take profit level, but a lot of times because it's longer term, I'm just kind of like letting it run and just paying attention to the charts periodically. And listen, the reward risk ratio on this tends to be really good. I mentioned Bitcoin because I mostly trade Bitcoin in this style. If at all, I usually use 10x leverage, which if you don't know, leverage is just, if I put in $1,000 and I do 10x leverage, it's like trading with $10,000. So your profit is 10x whatever your profit would have been. But likewise, so are your losses. So when you trade with leverage, you have to set that stop loss really tight the higher you get, and you get stomped out really often. So I tend not to play with higher leverage. It's just more risk, and I want to have good winning trades, especially in the swing is longer term. So getting stomped out early just doesn't make any sense. So I might go a little bit higher on leverage if it's a small position and I feel like, maybe gambling a little bit. But like I said, it's going to be a tight stop loss on this because I don't want to take a hit too big financially on that. So when it comes to altcoins, they're already really volatile, right? That's why when Bitcoin moves a little bit, altcoins, if they're running, are going to go quite a bit, and vice versa. When Bitcoin drops, altcoins tend to really plummet at that time. And so I don't like to leave altcoins unattended for that long, meaning like in a swing trade. So if I do swing trade any alts, there needs to be a lot of price history. Like I don't want to trade on a brand new token where there's no really clear support and resistance levels because it gets really muddy. That's the way that I might be picking stop loss levels or take profit levels, right? So typically, no leverage trading on alts. Because the volatility, they can wick up and down really fast. You get stomped out really easily, and it just increases the risk. So 10x on Bitcoin, maybe a little bit higher if I'm feeling froggy and want to jump at it, and I feel like gambling a little bit. And then if I do leverage at all on altcoins, it's like 2 or 3x absolute maximum. I mean, I've even had bad results playing with 5x leverage, so I just tend not to do it on alts. Now, I'm not totally risk averse. It might sound like I'm playing this thing really safe, and I am because I want to make gains, right? And so, investing long term and swing trading are longer term plays. And so, yeah, I don't really want to risk too much there. I want to make those gains. So, I also do some scalp trading. Now, what I'm looking for here is I'm finding a strong setup, and I'm looking for ranges a lot of times, right? So, clear support and clear resistance, and I'll take a long position at the support, and I will take profit at the resistance. I'll just sell at resistance. I mean, close out the entire position a lot of times, right? So I'm okay with making quick small amount. You might think, oh well, you're only going in with so much, and I'm not playing with high leverage. But the thing is, it's just additional gains. And those things add up because I'm also not taking huge losses at the same time. Now, if the range is big enough, if we're talking about, support is down here and then there's just like a whole lot of gap between the resistance, then, maybe I'll take partial profits halfway up, and then close it at the top. But I did take a position on hype actually earlier today, and what I did is it's extremely close to all-time highs. Like, we're just playing around in that area. It hit all-time high, and then it tested and it came down a little bit of a correction. And so what I did is I took a position. I opened a position exactly right at support, and then I set up a take profit level just a little bit shy of the all-time highs. And so when it gets up there, I'm going to move my stop loss up to the area that I entered the trade at, and then I'm going to let it run because there's no resistance past the all-time high, right? So I'll take partial profits to secure that, just around the previous all-time high. I'll move up my stop loss to remove any of the potential losses that I could have. So I'll be in the money. That's good. And then, because there's no further resistance, I'll let it run. But I did this in a situation where I'm home and I'm able to kind of pay attention. So I integrated the scalp trading actually for this exact reason. I'm always reviewing the charts for videos and for different trainings and things like that. And so I would see trends and I would see good setups, but I couldn't commit the time to just sit and watch. But however, the nature of my work, the nature of just, the way that I've got my personal life set up is there's days where I can be a little bit more attentive to trade. Today actually it happens to be one of those. And so I was able to take this trade. So in other words, this scalp trading is really intermittent. I'm only doing it when I'm actually able to, time-wise, and there's a perfect setup with a good reward to risk ratio. So the whole point of trading is to be successful and to make money, and there's plenty of ways to just, completely degen and gamble in crypto. So you don't know what you're doing so much, what risk is involved. You have to consider your lifestyle and your risk tolerance as well. The whole reason I'm doing this video is so you can hear, like, oh, these are some of the options. This is maybe what it kind of looks like, from how are you actually living it? What does it actually, how does it affect your life? Like, what might work for me? I'm not saying it so you can know what I do necessarily, but so that you can figure out what works for you. So the only thing that I really didn't touch on here is the technical analysis element of trading. So if you don't know this part very strong, like if you're not strong with technical analysis, I would, pretty much discourage you from using any kind of leverage. It's probably best to just be a long-term investor, at least for now, until you learn some of these things and you have some success, and you've maybe done some practice trading. There's some of these centralized exchanges have places that you can do practice trading. And so I'm going to be talking a lot about trading in some upcoming videos. So if you find this kind of content helpful, go ahead and hit the like and subscribe button. Watch this video about the dangers of hodling, and I'll see you in the next video.